When you tap Buy on your investing app, where do those shares actually go? They don't stay on your phone. Your broker, the app you're using, does not hold your assets. They are the middleman, passing your transaction through to a much larger central vault. That central vault is called a depository. This is the institution legally responsible for securing and holding your digital shares. To understand why this exists, look at the 1990s. The Indian stock market ran entirely on physical paper share certificates. It was slow, insecure, and plagued by severe fraud and lost documents. Modernizing the nation's financial markets meant completely eliminating paper. India needed a new kind of institution, built from the ground up on absolute systemic trust, to digitize and hold everything. The government solution came from the market regulator, SEBI. They mandated a strict, permanent shift to digital infrastructure to lock down market security. To maintain complete oversight over this new digital wealth, the law allows exactly two depositories to exist in India, NSDL and CDSL. This system is mandatory. Every equity investor in the country has no choice but to use one of these two entities to hold their shares. When a government legally requires 1 billion people to use a service and restricts the market to only 2 companies, traditional competitive economics disappear. You are no longer looking at a standard business. This graphic from an investment memo perfectly illustrates CDSL's business model. They operate exactly like a regulated digital utility, similar to a water company charging per cubic meter, rather than a traditional financial firm. Building this digital toll road requires massive upfront spending on a permanent baseline of advanced server architecture, but once built, they achieve total operational leverage. The cost to add new investors is practically zero, turning nearly all new revenue into pure profit. In this flowchart of the trade settlement process, CDSL sits in the center. Their system integrates directly with depository participants, your retail brokers. Those brokers act as on-ramps. Every time they acquire a retail customer, that account is automatically routed onto CDSL's infrastructure. External companies spend billions competing to acquire customers, while CDSL simply owns the road those customers are forced to drive on. That road makes money through 2 distinct engines. The first is the annual maintenance charge. This table breaks down historical account growth. CDSL levies a flat annual fee on every single account, paid directly by the broker. With over 18 crore accounts, this fee creates a massive locked-in revenue floor that compounds annually as new accounts are added. This mechanical baseline acts as the ultimate safety net. Even if the stock market crashes and trading volume drops to zero, CDSL can sustain highly profitable operations just by holding the accounts. Then there is the second engine, the upside. Every time an investor sells a share, CDSL charges a per-trip transaction fee. When markets are booming, this generates massive revenue bursts. They also stack hidden B2B tolls on top of this, charging corporations annual fees to issue dividends and routing data verification through their KYC subsidiary. This dual-engine design creates a remarkably resilient financial profile. They are mechanically insulated against bear markets, yet capture limitless ceiling potential during bull markets. If you read the headlines on this report, you'll see the sheer historic scale CDSL has reached, becoming the first depository in the world to cross the 18 crore, or 180 million, account milestone. Hitting this number is a clear, measurable indicator of India's ongoing financialization and the rapid expansion of its middle class. Yet, despite those massive absolute numbers, India's actual population penetration is only around 13%. Compare that to established markets like China at over 55%, or the US above 60%, and you see a runway of over 1 billion potential investors. As that remaining 87% of the population gradually enters the market to build wealth, every single one of those new investors must pass through this protected regulatory duopoly. With fixed costs and a dual-engine model, CDSL will quietly collect digital tolls on 1 billion people's financial future.